Yo guys, welcome to my weekly sort of breakdown on the trades we took and sort of explaining how I took these trades and how you guys sort of could learn from this and pick up some pointers. Okay, so I said obviously on the Telegram free channel, again, if you're new to this video and you're new to this channel, all the links to my trading stuff are in the description. Be sure to check those out. Okay, right, let's get straight into it. So this week, obviously starting on the 27th of June, we had this previous price action that you can see here where price initially pushed down very hard, down towards 1821, and then price sort of started accumulating, creating some sort of reversal pattern like this, and price pushed up. I initially said on that forecast video for that week that I was expecting price to push up to this area and to get some sort of reaction. Okay, I'm not going to specifically say where my sell zone is, but what I do look for, right, is I look for the right time. Again, this is all included in the VIP, the right time to enter and to sort of just follow these supply and demand zones. Okay, so you have sort of supply zone here where price push down from this area, or is it demand zone? I'm really confused on which way they are, supply or demand. But we have a sort of retracement area of price pushed up. I'd expect price to continue its bearish trend to push down. As you can see, we are making lower highs and lower lows. Price is a lower high there, pushes up, makes a lower low again. This was obviously some sort of retracement based upon some news event. Price pushed up, pushed lower here. Again, pushed up, pushed lower. Okay, so pretty much that's what I was looking for. That's how I usually trade when we sort of get these big impulsive moves. Wait for a retracement and continue that, because you should get some sort of reaction based upon that area. And it's also you're trading as high and as low as possible, especially obviously when you're buying. Okay, you're not placing trades within this area here. You're waiting for price to get as high as possible, and this is how we can snipe these trades, guys. This is how you see a lot of snipers posted on my channel. Is if I get the short position sort of thing out, you can see that your SL would be based upon the previous high, right? Because if price pushes above this previous high, you don't know where it's going to stop. It could continue its push up higher, 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 while you're holding your trade, expecting it to start dropping, right? So that's why I decided to say, okay, if price pushes above the previous high, I'm going to get out. Why? Because I don't know where it's going to stop. And I'd much rather wait for another setup to, present itself rather than stressing of holding drawdown. Okay. So this is sort of like where my SL goes. Obviously, if I find some sort of structure where I'm not expecting price to get to, you can shrink the SL down a little, just keep that. If you can see here, based upon this entry here, price only went 10 pips into drawdown. Okay, but just for the sake of giving some space, you never know what price will do at this time. And then so the targets are usually based back down to the bottom of the range where price sort of accumulated to push up. That's where we end up targeting. And you can see on Monday we had a nice 200 pips sort of drop, and I'm sure this was shared on my VIP on the 27th. Where were we? Here, so you can see price obviously was pushing up to the sell zone, was expecting a push down, gold sell based on technical, high risk trade, 60 pips SL. It had to be a little big up, but we did drop the risk just in case price started pushing up. Yep, there's 60 pips right above the high. Price tapped it. We had an initial reaction straight from London session and price pushed down. And then what did we do? We waited for the similar sort of setup again. Obviously, in this case, we have a hidden sort of supply zone here, and we have one higher up. So this presented two sell zones now. Okay, again, I do have a certain tool which I use, which is the Fibonacci tool, along with certain parameters I have adapted myself based on back testing specifically for my strategy. But we have the same sort of setup. Okay, we're not taking trades within this sort of slow, sluggish price action. Okay, we're taking trades when there's going to be high volatility, where the volume is, and we're going to get in right where the banks want to enter. And that's the kind of ethos, obviously, the strategy is based upon, is obviously trading with the banks. You want to trade on these high volatile moves. You don't want to be trading, obviously, with these small sort of candles. You want to be trading on these candles without getting stocked out, of course, and keeping the risk managed, because you're not putting a house on the line. We're keeping the risk managed. Okay, so again, price came into this area, sniper trade, SL was above where? This wick here. That's the high for this sort of demand zone, isn't it? Or I'm just ignore me if I'm getting the supply and demand mixed up. I can't really search for it now anyway. That's where price came into this sort of demand zone. SL was obviously higher, and then price then pushed down. Okay, similar sort of setup. And then because gold is in a sort of consolidation phase, you can just play ping pong with the market based upon following the trend, right? Ping pong setups happen when gold likes to consolidate. Okay, so when people are stressing and getting stopped out based upon consolidation and distribution phases and all these Wyckoff setups, right? We're out here capitalizing in the market because we know that, okay, let's take every sort of trade setup you can see, and you can see it from the results I shared on VIP. Give me a second. Go all the way down. You can see we took, a bigger number of trades this week, but the setups were there and we decided to take them. The confidence was there as well, because after a few good trades, your confidence starts building up. I won't say start increasing your lot sizes by 10 times, because that can negate all your profits, but keep the same risk, or obviously slowly increase the risk, but keep that confidence there. And that's exactly what last week gave us. And you can see the moves kept playing out. Let's just keep looking at some more trades. So what do we have here? It was definitely a news candle where price pushed up. But I think, did we take this buy? No. We were aiming for the sell. That's it. We were aiming for the sell. You can see we have an order block on the left here, right? If you cover this whole order block from the high to the initial push up, so obviously price pushes up. This is more of a manipulated move, so I'll push up here, and then price then has a straight move down where the banks have sort of sold, institutions have sold, and then price needs to come back and clean that. So if you move this box across, you can see, look at that, price tapped into this area, right, and then continued its move. Why? Because when banks have sold here, right, and they're trying to stop out all of these traders that are here, collect as much liquidity as they can, and then add to their sell position. So now they have 2 sell positions. And again, guys, more of this is more, spoken about in depth on like how banks enter, how institutions enter into the market on my strategy, which I provide obviously to the VIPs. Right, anyway, let's continue. This trade was the interesting one, because this one I shared on the free channel saying that it missed my entry by 10 pips. You can see my sell zone was around about that area and it left a gap. It didn't push into the sell zone. And this happens many times when you end up missing your position by a certain amount just because price didn't extend. It doesn't matter. Let the trade go. Let's reset and come back for the next one. What happened? Right, same sort of thing. We have a big chunk of liquidity here, right, based upon this news candle, right? I also have a supply zone based upon my strategy as well, and this would be as low as possible to buy. Okay, what happened? SL will go below the low. We have a long position activated. SL below the low, 30 pip SL, right? Sorry, guys. And then price pushes up 80 pips. Look at that risk to reward, 1 to 3 risk to reward ratio. So if you risk £10 on this trade, you would have made £30 back. Okay, so this is where the profitability factor of the strategy comes into play, and this is how you end up trading. Right, you have a big chunk of liquidity. Don't get scared. Right, people get scared thinking that, oh man, it's going to fall down. No, price, you can see that price touched this area, rejected, came back, and then retested, and then started its push. Okay, so you have to wait for some sort of price exhaustion, as they say, can't even say that, exhaustion, where price started to slow down. Okay. Sometimes price does eat through, and don't get me wrong, price always goes through an area and goes and straight and attack your SL. But as long as you're entering the right risk, just take it. That's all I say to the VIP members. Never be scared. If price is moving quickly towards the upside, just know it'll come just as quick back to the downside. And it happened on this, was it? No, it happened on one of the days. I can't remember. Let me find it here. Price pushed all the way to the upside here, right? And we took the buy based upon this lower setup here. SL was below the low. Price then pushed up. Okay. I was expecting price to push above the previous high, but no, what did it do? Price came into the sell zone, right? Remember, you got a sell zone based upon a bullish impulse. Price come to retest it, SL above the high. And then price in that same day, within 3 hours, came all the way back down. A 200 pip move up and a 200 pip move back down. That could have been your whole week done. That could have been your whole month done in one day. If you know how to sort of read these setups correctly, find where the liquidity areas is, find where the right time to enter is, and place your SL in a nice, decent position. I hate when people have SLs, above 100, 200 pips, because it's absolutely awful. You're not going to get the right risk to reward. You may have to put a 0.01 because, the SL is so big, but will you be holding that trade for 200-300 pips? You might be stuck in this area here where price is taking hours and you just want to exit the trade and take your money. So then you'll end up risking £10 on 0.01, but only taking £3-4. Okay, so what sort of trade is that? You got to keep your mindset clear as well. And this is what the benefit of the way I trade is. Okay, so that's sort of pretty much how I trade, and the breakdown that we took, the breakdown of the trades we took. I think there's one last one where price came and took out the 86 wick on Friday. Yesterday, you can see we have a wick here. Price pushed down, took out the SLs around that area, and then accumulated for price to start pushing towards the upside during US session. Price did that, pushed 200 pips. Okay, but I was obviously, I think I did send up the buy setup. Many traders stayed in the trade. I just, was like, yeah, I got stopped out twice, very tight SLs. I think they were like 15 pips. I did even aggressively enter again, and it came back to take me out as well. So I was just like, no way, gold just doesn't like me today. But what happened again is price flew 200 pips towards the upside. I wasn't even bothered, right? Why? Because I was getting ready for my next setup. If you're going to be FOMOing and bothering about the buy setup, for the whole day, you're going to miss the next other opportunity. Because what could happen is price could push up really fast. You're going to be crying about the buy setup that you missed, and then you missed the sell setup. Okay, so that's exactly what we did. You can see we have an order block here, like that. Price pushed up and then sort of slowly made its way out back to the downside, continuing its push down. So I guess this is some sort of redistribution zone where price pushed up, and I got many of the orders in. Price then came back to the previous daily high, or even the previous daily close or the daily high of that same day, which is right here at 10 o'clock, 11 o'clock there. Look at that. Price took out the daily high here. We entered a sell. Where would the SL go, guys? Obviously, you guys can't respond because it's a video, but we place the SL just above here. I don't want to extend the SL towards 1814 because the risk is just too great to risk on a Friday night, right as the market's about to close. So yeah, there you go. So we have our short position right there. SL will be just about there, 50 pips. I did say 1811 or 1812, depending on, where you're how much you want to risk and stuff. And then look exactly what happened. Price touched that area, took out the liquidity of the daily high. Because this move was so significant, right? I just took the gamble. You could say you took the gamble to, we risked the right amount, and then price dropped 80 pips within an hour. TP1 was hit at 1800. As you can see from the left there, if you bring this up, there we go, 80 pips, and then we were at the trade, or I secured one small position, took 80% of the profits because it is a Friday. I wanted to bag those profits, and I just left the rest holding. As you can see, it came back to take me out on that same day. And this is all a daily close sort of move. Price is just, you know, the algorithm is sort of just getting the market where it wants to be for the close. Okay, how the daily close wants to close. Sounds so weird, but yeah, that's true. But okay, yeah, so that's pretty much it, guys. You know, you just want to find out where the daily highs are, daily lows are, see if how price reacts based upon those levels. Find your order blocks, find your highest point of entry for sells, find your lowest point for buyers, and then just take those setups. Again, I can't say too much of this stuff because, you know, I share all of this stuff within my VIP. If you want more understanding, link is in the description. You know, it's £30 a month. And there are bundle payments if you want more months as well. And you can also join for free based on if you want to join through our broker, which is FOREXC. And I posted this over here. It's in the pin messages as well. And this is the sort of video that you get, you know, 3 to 5 ideas a weekly, sometimes even more. You sometimes could get daily trade ideas. If I can pause, no, I can't pause it. You know, 200 pip plus a month. You can see that this week we caught 500 pips. So yeah, we've absolutely destroyed that number. And I'm actually going to provide a monthly pip count. Actually, it's a new month, so I'll do that now. Yep, link is in the description for this free channel just to stay updated with us. And that's pretty much it for this video. It's Elite Empire FX. Peace out.